Good morning. I am Joe Hilsdon from Nassau Street Partners today. I am joined with CJ Follini. CJ, pleasure to have you here.
Thank you. Beautiful location.
Absolutely. I suppose starting off, it might be quite advantageous if you can give everyone an insight into your career so far, what you're currently getting up to at Noyak.
Thank you, Joe. And yeah, I'm happy to be here, even though it was Snowmageddon. I'm glad we persevered. Let's see, native New Yorker. I've been in the wealth management and personal wealth management as a leader of a multifamily office for over 35 years. I sort of fell into it after a failed professional hockey career, which was going nowhere. So I guess I lucked out when my father had a stroke. And I had to take over a family business as well as family portfolio. And oddly, I found that I had an affinity for it. And one family became two families became four families. And we maxed out over the years at 9 families, anywhere from $1 to $2 billion, depending on the time, the decade, the portfolio. And that changed at the onset of COVID. We lost, sadly, but we lost 2 of our nine committee member founders, family patriarchs. And that started a conversation about instead of wealth management for the smallest 1/10, 1/100th of 1%, what if we applied the same principles to all, either accredited or even non-accredited investors? The same idea of modern portfolio theory for all. I hesitate always to use the word democratization. It is truly a hackneyed and cliched term, but in this instance, it is apt. And that's what I did, is try to democratize and bring to many people what we did as a small group for 35 years.
And I suppose after managing $2 billion in capital, are there any specific patterns that seem to have become more obvious to you?
It's funny. For the longest time, everyone, the institutional capital world, I wouldn't say for many of those 30 years, our multifamily office, which was called Noyak Capital, and now our current entity is Noyak, a builder of AI agents for personal wealth management. For most of those years, the beginning was you're going after alpha. You're deal bird dogs. You're looking for that deal. And then as you mature as a portfolio, as assets under management, as a multifamily office, you're really more about maintenance, risk management. I think something that is so underappreciated in the family office space. I don't care how big the family office is. Everyone is looking for alpha when they should be worried about beta, frankly, and risk, especially in today's environment. There's so much volatility and risk. And that's really what I did for the last 10 to 15 years, was try to manage both the pursuit of returns, the pursuit of alpha for these ultra high net worth families, while really capping the potential downside, protecting the risk and maintaining what they already had.
Yeah, you touched on it there just in terms of risk volatility. How is AI changing the way that you approach investing?
Well, dramatically. And I'm not going to pretend that 4 or 5 years ago, we were the most tech savvy. You would definitely, if the word fintech and our multifamily office were in the same sentence, you would call it an oxymoron. We were old school in the best of ways, and we were very successful, 22% IRR over the last 25 years, very successful. But, being on the cutting edge, especially in terms of governance always, but being on the cutting edge in terms of management style, pursuit of the latest and greatest wasn't something we concerned ourselves with. Except when I first came in contact with generative AI, which we'll talk about the differences. And that was about 3.5 years ago when GPT was first launched. And we had to do a lot of large-scale compliance work. Well, someone suggested, even in the earliest stage, God, I think it was GPT-1. I think it was GPT-1, actually. It wasn't even, I don't even think they had a version control yet. The productivity that was so evident, it was a light bulb moment. Now, people talk about the Industrial Revolutions 4. Obviously there was the steam engine, there was the computer, there was the internet. Now AI is the fourth industrial revolution. I saw it at that moment. I don't think everyone does have light bulb moments all throughout their life. If they do, I think they're fibbing. But this one for me truly was. And that was the beginning of compute power and generative AI. I would say in a slightly smaller way, I had yet another one because things are moving so quickly, another aha light bulb moment. And that was with Agentic and AI agents and the building and what they can do. So it's really generative, the computing power, the raw muscle of what macro AI brings. And then there's the execution layer of what agents can be directed to do. Very different. And I'm happy to go into more detail, but those two things for me are the greatest innovations in my lifetime.
What I think is interesting, obviously you touched on agentic AI in comparison to, I suppose, generative AI. If you were to try and break down the difference between generative AI and agentic AI for someone that frankly knows nothing about it, how would you characterize each, and which do you think has the most power in relation to investing today?
Okay, well, I had an answer for you until you added on the power, the power second part of your question. Okay, in a phrase, passive versus active. Generative AI is bringing unbelievably massive computing power to anyone who has a desktop. However, that computing power is for you to use, not for the app or the platform to do anything. You have to direct. So the same way that you're talking about directors and actors on film and production sets, you're the director in that analogy. And if you direct poorly, that film is going to be, to use your parlance, shite. And the actor can't do anything. They're just a vessel. That is what generative, and frankly, that's becoming a commodity. Now, no one would have anticipated that. The first year I said, oh my God, this is going to be the driver of the bus for as long as I can think. But that's not true. In less than 3 or 4 years, generative is really a commoditized energy expense and computing expense. And it's going that way even faster. I'm not saying there's going to be obsolescence in generative, but frankly, if it's not actively doing, I don't see a huge place for it. It's going to be a search engine. It'll just be embedded in your browser, and that's it. I know that seems a bit dismissive, but it's our belief. Now, the active, the director, that is what an AI agent is. To belabor that analogy more, a studio can instruct a director, hey, we need this film to look like this. It's got to be a horror film. It's got to have a budget of this, et cetera, et cetera. Those are the guardrails for a director to produce, to create a film, right? Exactly the same way. At this stage, we as owners and directors of these AI agents, we create those guardrails. Do these things, execute the execution layer on this workflow, but don't exceed this criteria. Don't move into that execution effort. That's going to remain under my purview as a manual decision maker. And yet, within those guardrails, there's massive amounts of opportunity for productivity. Think of what lawyers, accountants, asset managers, the Blackstones, the Apollos, the KKRs of the world. I don't want to get too far into the negative when it comes to labor, but if you look at all the repetitive workflows and the amount of compliance and pure paper, they still have filing cabinets. I mean, of course, they have large data centers that are storing all of their data, and they're probably in a mountain in Pennsylvania somewhere. But there is massive amounts of repetitive human effort. That whole ball is going to be replaced by agents that are directed by knowledgeable guardians. For example, you could say that as a multifamily office, as the leader of this office, I had 9 partners / bosses. They would say, we don't want to go into these sectors. We don't want to do an individual investment more than 50 million. We all discussed and agreed upon guardrails. Now, they were executed on by a human, me, but those are still guardrails that would be a fail if I exceeded. Likewise, when an agent is executing on a repetitive task, those guardrails prevent it from doing things that the guide doesn't want. What's interesting to me is to bring that level of institutional productivity to the individual. So many people can't afford registered investment advisors. And the registered investment advisors in turn say, if you don't have $1 million, please lose my number. Or if you don't have $5 million, please lose my number. And they don't mean it that way. I'm being churlish. But they say there is an economy of scale for us to work with you, and we can't work with less than X, right? So what do all those people do? Which is mostly probably about 99% of the population, and probably even greater of the investing population. What do? They just wing it. They just meme stock it, right? And therein lies manias and bubbles and things that happen because they may not have ever been taught, and they're just listening to the latest influencer. Imagine if you had access to massive amounts of computing power that is behind a personal wealth management agent for those people who maybe subscribe $25 a month or $50 a month, right? And they have access to the same level of brain power or greater at a speed that is blindingly faster in order to manage their own wealth portfolios, make decisions like liquidity ladders, life insurance. I don't know why I'm an investment professional, but life insurance has always vexed me. I think it's boring. And when I think something's boring, I don't want to do it. I don't want to put the time in. I feel bad. I'm making a confession on camera, but that's the truth.
No.
Well, I may not have to worry about that anymore. There will be a life insurance decision-making agent easily, probably within the next 6 months.
And I suppose you touched on a time frame there, but where do you think the most obvious or perhaps non-obvious opportunities are in the market right now for investors that are wanting to get involved in the AI boom, if you want to call it that? Okay, so that's an excellent question. I mean, that's what everyone wants to know. Where do I get in? I mean, not everyone, that's not true. But if you are interested, you want to know, how do I access this, especially at a smaller dollar? Well, at the risk of talking my own book, obviously we are raising Noyak, LLC. We're raising on WeFunder, which is a community round raise because we've already raised from the same family's multifamily office that I mentioned. And they provided that foundation for us to get started. But if we don't walk the walk of democratization of access, then we're not speaking the truth. We're not being authentic. So if we don't allow all of our potential customers to also invest and succeed along our journey, and we're just making money off of them as customers instead of partners, that's wrong. So I'll end with saying we are an AI agent builder, and we have a community round on WeFunder. I think it's WeFunder.//Noyak, exactly, WeFunder Noyak. Where else? Well, when I spoke about the generative AI boom being a commodity, well, in commodities, like whether it's physical, metal, copper, gold, massive amounts of capital are required to get the return you need when something is commoditized because the pricing, the margins are so thin. So if you don't do it at massive scale, it's not a feasible business. It's not a good and profitable business. So for the individual to invest in generative and the general AI boom, I think it's incredibly hard. Now you can do the infrastructure, data centers, et cetera. But how much is 1,000 against Blackstone's real estate investment trust really going to earn you, right? What equity percentage are you really going to own of a several $100 billion fund, and illiquid at that? So for me, the greatest opportunity in the $199 billion addressable market of Agentic is Agentic. Now, we're not of course, not the only opportunity. There's plenty. And it's just starting. So I would say it's like
American baseball, I know you're from the UK, I'm sure you know, it's spring training, right? The season hasn't even begun yet. They're just stretching down in Florida somewhere, all the professional baseball players. That's where we are with Agentic. We're barely at spring training in this run up through the season of what will be opportunities to invest in Agentic. It's early.
I think probably one of the many issues just at which the rate is growing within AI. How are you differentiating opportunities that are perhaps just feeding into?
Excellent question. Excellent. Well, first, it's I do a first filter of what I said, commoditized AI versus agentic and value add. So it's not just agentic. I've said that 15 times. There's other value adds applications. You look at the Apple App Store now, which is generating I think it's like 12% of Apple's revenue actually. I think the application layer, and including to agents, but the application layer of AI, those people who are building how to direct this massive computing power, I think that is an entire sector to focus on, and still extremely early. So there's plenty of time. The agentic layer is another. So you have the foundation of the compute power as macro generative, you have the application, and then you have the agentic. For us, my first filter is we're all in on agentic. I'm a believer. I think it's actually going to merge with the robotics boom, because every robot in the physical space is going to need an AI agentic brain. I would go so far as to say those agents will be directing driverless taxis and driverless air taxis as well. So for me, the future's so bright on agentic, I got to wear shades. I got a great Timbuk 3 quote from an old band. I just aged myself. I think that band was in the 80s when I was in the UK. The future is so bright in agentic because it's going to cross-platform into so many subsectors of AI. It really is. And in doing so, its profitability, its demand, I can't even fathom the addressable market. Right now, they're guessing it's $199 billion. I think that's scratching the surface of this iceberg.
I think we speak to a lot of business owners that see what is happening in AI, and they're always thinking, well, what can I do to incorporate this into my business? I suppose you, as a business founder yourself, what are ways that you address key points that you can then utilize AI? And I suppose how would you then relay that to another business owner?
Okay. So as a asset manager, that's my background. That's the core of what I've done for 20, 30 years. Now, agentic AI builder and founder. My business is a little bit different. I am not a public company. I don't have thousands of employees who have repeatable workflows that are churning out the same stuff all day long. So first of all, everyone asks that question. I don't care if you're us as a small-ish asset management firm, whether you're Blackstone or whether you're Procter & Gamble. Or you're a law firm, actually. I think they're weirdly ahead of a lot of people, which you'd never say about lawyers, but lawyers, sorry, listening. Anyway, there are a lot of law firms that have said, okay, we do so much of this repetitive stuff that we have to. It's a different kind of compliance than the legal. What can we not do? So I think the first question is, what blocks us? What do we hate the most? What do we hate doing the most? And oddly, if you look at the Venn diagram of asking yourself in your business that question, and then bringing in the abilities, the capabilities of either the base layer of generative AI or now the agentic, the execution layer of agentic AI, and you're like, oh my God, we hate doing that, and this can do this, and those three things. Let's start there. And I also think that people think you have to transform the whole business. It is not. It is one thing. We hate the compliance. Okay, let's create an agent that does legal compliance for our insurance companies, our insurance company clients. Just that. That's one type of client in one business sector, legal, et cetera, for one firm. You see, it's a beachhead. You start there and then you expand laterally. Oh, now it can do that. And And what happens is, and this is something that we're looking at as we look towards institutional clients, we establish a beachhead with a group, we forward deploy, we work with that group, we say, let's build you custom agents that do the things you hate the most. Let's find out what those are that you hate, and let's do that, and do it at scale and speed. Then, when you're working cross-functionally with other teams in your company, in your sector, make sure to mention how much more time and you're going to play paddle in the afternoon, because you don't have to do those things that you hate. And then they see it. And then they say, how can we do that for our team? And then you expand this business of agentic building laterally within a firm, and then within a sector, other firms. So it's intra first, then inter firms, and then intersectors.
I suppose from your perspective, if there is anyone out there thinking about agentic AI as a possible investment opportunity, do you think there's anything that you would want them to know?
That is a tough question, actually, because there's so much, and yet we're at the beginning of this. I mean, yes, you want to get in early in this. I mean, I'm sure weird things. We're one of the earliest. The multifamily office that I led for decades was one of the earliest investors in SpaceX. You can imagine, as I was talking to septuagenarians and octogenarians about space exploration about 15 years ago, how that went over. Yeah. When I was there, they're like, you want to invest in what? In space? Or are we buying NASA? Like, no, it's not NASA. That's private. There's a private NASA? Anyway, that was a long conversation. And luckily, it was a successful one. And that's the same place we're at now. So if you think about those conversations when Elon was out there talking about space exploration in a private business, and some of the looks he must have gotten from even large investors, except the ones who did invest in us. Maybe we did it without even knowing what we were doing, but we did it. That's where you are with agentic. Because again, there's a lot of people who don't know the difference. I mean, the general public really doesn't know the difference between, as I said, general computing power, AI in its earliest forms, versus the execution layer of applications and agents, right? It's tough to say. So in order to distinguish and then evaluate investing opportunities, I hate to say, is almost impossible at this point. Now, I'm going to go back to the SpaceX analogy when we as a multifamily office were evaluating things that didn't even really exist. We said, okay, how much can we afford to lose? That was our first question. We said, in this portfolio pie, how much can we afford to lose? And what is our risk profile? And what is our highest risk profile sliver? This amount? Okay, do everything. So if we have this amount to invest, spread it amongst everyone you meet. It is literally another analogy going back to my film world. If you want to make a large fortune in the film business, you got to start, you want to make a small fortune, you got to start with a large one. And the only way to really do it is you got to make 20 films, because 2 of them will be great. Most of them will be mediocre and break even, and the rest will be zero. True venture capital metrics, right? And it's the exact same thing. The thing I learned from some of the smartest venture investors, Tim Draper being one, several of the New Yorkers, is early stage sectors, you have to spread your bets far and wide, because the failure rate is exponentially greater. But the success return on those individual successes is so outsized that all of that 95%, 98% failure rate will be irrelevant. So right now, I would invest an amount that you can spread amongst as many as you can come across. So I think the bigger issue is the bigger issue is access.
And I suppose there seems to be a recurring issue in today's market. There's so much going on within AI. It's hard to differentiate where to deploy capital, how to deploy capital, where the best access points are. I suppose for you and people around you that are evaluating these opportunities, and I suppose in turn, if you were to relay that information to people watching this, for instance, how would you put that message across to them?
Well, we're in the earliest stages of a forming sector. So this is very much, I don't even think it's mature enough to call it seed stage. risk reward metrics of venture capital. It's before that. It is moonshots, right? So the smartest investors when we're talking about early industries and making bets in those sectors, they say don't overthink it. You figure out what your powder is, how much you can afford. Assume total loss. Bet everywhere as long as you have access. And I'll get back to that because that's really the critical element: access, and at what level of access. Because institutional access is not really access. Oh yeah, it's a minimum 5 million. Oh great, let me go to my lunch. Let me go to the ATM. I'll get that. So that's not really individual access. And really spread that amount that you have said, you know what? I'm going to assume this is a business-minded lottery ticket. Now, as any lottery ticket, these are of course better. 99.9% will fail and you will lose everything. But in the earliest stages of sectors, the winners the returns on the winners are so great, they're so exponentially large that all of that 99% loss is made irrelevant because it's covered by outsized returns on the earliest stage sector winners. NVIDIA being one of them, one of the first video chips. I think NVIDIA is a perfect example. Oddly, I have a weird cross with NVIDIA in that my father-in-law, who just recently passed away, in fact, his memorial was this week, God rest his soul, Louis Pemberton. He was one of the earliest investors in NVIDIA. It was less than $10. I think he invested when it was like $3 to $5. And he bet, in all honesty, he bet on the jockey, as we say, which was Jensen Huang, a genius, and he recognized that genius. But he also recognized, and he's a traditional registered investment advisor, traditional RIA, and was doing it for 70 years. He passed away in 97. Great life. And he said, I'm not going to overthink this. Even at his age, he was betting, 10, 15 years ago. He's in his late 80s, and he's making long-term bets. Now, of course, this one worked out for he and his clients, and they all did phenomenally well, early stage. But even still, he said, I'm not going to overthink this. I just spoke to a man that I believe is one of the greatest business leaders of our time, and I'm going to make a bet on that. And if I can find more, I'll bet on that as well. And yes, most of those will lose. And this is a late 80s speaking, right? A gentleman speaking. But if one of those hit, I don't have to worry about any of my last 50 years of deals. And echoing that by the greatest investor of all time, Warren Buffett, he said, I've been investing for the same 70 years as my father-in-law. Maybe, about the same. They're about the same age, actually, I just realized. And he said, I probably have only had 12 truly great investments over those years. But those 12 made all the other hundreds worthwhile because that's all you need in 70 years. And you could say that at the earliest, when a new industry is forming like AI, and more specifically Agentic AI, one bet that actually succeeds, one company that you bet on, and you may have made 20 investments. One of those investments hit, well, all of the other 20 are forgotten because it covers them all exponentially.
And I suppose within all of that, it is about identifying the correct opportunities, perhaps even at the right times. And I don't think anyone's denying we're incredibly early on, and you make a very valid point. If we look at Noyak, for example, how is that the type of asset manager or the type of business where people can then gain access and really start being able to see the fruit from these opportunities without having to comb through hundreds of different businesses?
Mm-hmm. Well, thank you. As I was an asset manager for so long, first for some tiny group of people, and then I opened up the funds to all investors, accredited and also non-accredited. I immediately saw the benefits of both AI and specifically Agentic AI as an asset manager. And I said, if I'm in this one small, narrow sector industry and I can tangibly quantify the benefits and advantages it provides me and my industry, imagine what it could do to all, industries at scale. And then I said, wait a minute, I should be in the picks and shovels business. not in the gold business. I should be the one selling picks and shovels rather than the one, hiring people using them. And so that's where I started to build a company to build these agents. Now, obviously, asset management is what we know best. That's where we're beginning, wealth management as well. The real fork came when we asked ourselves, Noyak, do we want to be B2B or we want to be consumer facing, individual customer facing? That was a big question, one that we took a long time, because my background is institutional. My background would be, you would say the obvious question there would be B2B, of course. And I said, okay, but I think the greatest benefit will come from the people who have the least access to the tools that have existed, who cannot afford a registered investment advisor, who cannot afford Bloomberg terminals and all the best data and information, which we all know makes investing, which gives investors advantage and edge, is best, earliest information and data, right? So I said, okay, I'm at a stage where one, yes, I want to build a successful business, but two, I also want to do a lot of good for the largest group of people. And that's what Noyak really is providing access to what is going to become a booming agentic AI business. Yeah, institutional will definitely get their access. They always do. The banks are already doing it. Blackstone's on it, KKR's on it. But to bring it to individuals will hopefully not only build a very successful business in Noyak, but also do a heck of a lot of good. And that's my last chapter in my business career.
Yeah, absolutely. I suppose rounding out, is there any key topics that you think that should be discussed here?
Yeah, I hate to end on a down note, but I do think I'm going to pull away from Noyak and the business, and this has been a wonderful talk about the potential of this investment, but I want to pull back and talk societally. Tremendous productivity, specific businesses becoming streamlined and less onerous and probably more effective, doing better both financially for the owners, more profitable for the shareholders and stakeholders, but also for the customers. So there's going to be an entire ecosystem of benefit. Owners, founders, owners, their shareholders, stakeholders, as well as the customers getting better products, better services, etc. However, as we said before, if you were to start as a founder asking the question of what people in your employees or you like doing the least and trying to solve that with AI or agentic AI, well, unfortunately, the people who are doing that have to start thinking about where are their new skills coming from. So, and you see what the value destruction today. I'm sure people will be looking at this 6 months from now. It'll be an entirely different world. But I'm going to date ourselves and say the value destruction in the stock market, not even yet in the companies, in the labor market isn't showing it yet. It's still so early. I'm afraid the acceleration is going to take people by surprise. And I believe that the greatest thing this country could do is to build, subsidize trade schools for reskilling. How about we need more people doing content creation and camera and sound and lighting. That's not going to be done by AI, maybe robotics sometime soon. Sorry, guys. But it's not going to be done anytime soon by a robot. It's fine. You got 5 years. And of course, all of the trades that we all know that are physical in nature. I think that countries can lead an education revolution. So that's my woo-woo, societal statement. And yes, I think there's going to be as big a negative impact as I'm sure a positive impact.
Yeah.
But we can prepare for that negative. We being our country, our society, the world, etc. We can prepare it. We just have to get on it.
CJ, I very much appreciate you taking the time today.
Are we going snowboarding now in Central Park?
Well, I think we might have to get the bikes and do some skidding or something like that.
Yeah, let's get a 4x4 and just pull us around Central. That would be fun.
Yes.
Chuck, thank you. Really enjoyed it.
Pleasure.
Enjoyed it.